Thank you so much, Meg. Thank you. And sorry about that, Katrina. It wouldn't be a virtual conference if
That's
we did
right.
not have some sort of like technical difficulties, right? So
That's right.
very happy to have you here. And I'm really excited to dive into this conversation. And so I really want to kick us off asking you if you can define what is a US expat for us.
Sure. So a U.S. expat is it's a broad term. Typically, an expat or an expatriate is anyone who lives and works outside of their home country. For US tax purposes, we're talking about anyone who is a US citizen or a green card holder that's living and working outside of the United States. So that's the population we cover when we talk about expatriates or expats in general.
Perfect, perfect,
Yeah.
perfect. And I know we've already got some questions coming up in the chat, so this is
Sure.
fantastic. But I actually want to kick us off with one that I think is really important for people living abroad. And that is one, do I have to pay taxes as a freelancer living in another country?
hmm
Or as a contractor
hmm
or as a gig worker? Because I think what we're seeing during this pandemic, and I know that there was an article that came out about the sort of YOLO economy, we're
Oh, yeah.
seeing the shift of moving from, full-time jobs into embracing the freelance kind of lifestyle. And so I would love to hear about that a little bit more.
So the short answer is yes, you do. I think the question that a lot of people have is where do they have to pay taxes? So, and that's going to depend on the country that you're living in. So, depending on the country you're living in, how long you're there, what you're doing, you may be required to pay tax in that country because even if you are paid outside of the country, let's say, for example, you're a gig worker, you have a contract with a US company, you get a US W 2, all of your income is deposited into a US bank account. That's not US source income, that's foreign source income. And that income is going to be subject to tax potentially in the country where it's being earned, which is where you are physically sitting. Not the country that holds your contract, not the country where you're being paid, not the country of origin. It's where you're physically sitting. So, yes, you could potentially have to pay tax in that country on that income. In addition, as a US citizen or green card holder, you're subject to US income tax on your worldwide income. So even if you're not subject to tax in that jurisdiction where you're physically sitting, you will always be subject to tax in the United States. And the reverse is true. So, say, for example, you are in Germany and you've got a German contract, all of your money goes through Germany. Hush. Sorry. All of your money goes through Germany. You would still be subject to tax on your worldwide income in the United States.
Taxes are so complicated.
So I have a job.
Well, that is why you have a job. And I am sure you have been very, very, very busy, especially with the extension of the
Yeah.
tax deadline.
Yes.
And obviously being a mom, it is
Yeah.
no easy task. So wow, it is so complicated. So sorry, I'm really laughing. It's just so hard. Because it's almost like, why don't they teach us these things? But then you would be out of a job, right? Because then everyone would know it.
No, it's still complicated. The IRS is the Internal Revenue Tax Code. I have it around here somewhere. It's about the code itself is 2 pages that are about the size of phone books. Then there's another 6 to 8 smaller phone books that interpret what's in those 2 phone books. So even if they tell you, there's still what I found just in my practice is, I've been doing this for over 20 years. I work with people all the time. I learn new things all of the time. I'm teaching people new things all of the time just because of what I see versus what they see. So I think the information is there, but then there's also the interpretation of the information, and that's where it makes it really complicated. But yes, it is complicated. Yes.
So complicated. So thankfully we have people like you to make it way easier.
Yes. Hey,
Oh gosh. So Katrina, we had a question that came in from Shalina that was asking, can those claiming FEIE contribute to IRAs, etc.?
Mm-hmm. So what you're asking, the question is about FEIE is short for the foreign earned income exclusion. And the foreign earned income exclusion is something the IRS allows for taxpayers that have either established a bona fide residence in another country or countries, or a taxpayer or taxpayers that are physically present outside of the United States. Typically, it's for 330 out of any 365-day period. And if you meet either one of those tests, then you are eligible to exclude an amount from your income, and it's indexed for inflation. Or this year, I think it's around $107,000. Okay. So with the IRA contributions, the way the foreign earned income exclusion works is it will reduce your adjusted gross income. So before you get to the amount of income that's subject to tax. And that's where a lot of the calculations rely. So if you're thinking about the stimulus payments, or even if you're doing something for your child and you have to fill out a FAFSA, a lot of what they're asking you for is your adjusted gross income. The foreign earned income exclusion will reduce your adjusted gross income down, making it appear that you could potentially contribute to an IRA, whether it be traditional or Roth, because your adjusted gross income is low. But depending on what investment vehicle you're using, it may ask you to add that foreign earned income exclusion back to determine whether or not you're eligible. So the answer is potentially, but it's something you would have to look at in a little bit more detail. It's going to depend on how much exclusion you're getting, how much of contributions you're trying to make, and then just your overall tax situation. So it's not an absolute no. It is potentially, but it's gonna depend on how much income you're making.
Well, I feel like every time we talk about taxes, it's that kind of thing where it's like potentially, but does it meet the A, B, C,
Yes.
D, you know?
And I always tell people it's like if something's wrong with your car and you call your mechanic and you say, hey, this is what it sounds like, they're gonna say, that's great, but I need to see it. And so that's what I try to explain to people is I can give you the general rules, but for me to give you a definitive one way or another, I'm going to have to open up the hood and see what's going on in there.
Oh my gosh. Okay. So I want to ask you a question. I'm an average person who knows very little about taxes. So every time tax season comes around, I get very nervous because I don't know what really to do. And so I want to ask you, for somebody who knows nothing about taxes, is there an easy way to educate themselves? Are there books we should read, beyond working with an accountant and working with a professional for those more complicated tasks? But is there something that we can do to educate ourselves in the meantime?
Absolutely. The IRS has a YouTube channel. It's not the most exciting, but it's there. They talk about a lot of relevant information. The videos tend to be pretty short, 2 to 3 minutes, where they talk about a lot of things that you normally would call the IRS to ask questions about. A lot of that stuff is on the YouTube channel. When I started doing taxes, just a little bit, when I've been doing taxes, I started working when I was about 12 or 13 years old, and my dad made me do my own tax return, that was just kind of the precursor to all of this. And at that point in time, you would have to go to the library and you would get all the tax forms and things like that. And that's how you would prepare your tax return. So fast forward I decided I wanted to be a tax accountant. I go to college and I start working for a company that does a lot of volume during tax season. I'm not going to say their name, but it's a bigger company. And one of the things they gave us during training was a publication that I share with anyone who wants to learn how to do their own taxes. It's an IRS publication. You can download it. It's publication 17. And it takes you from beginning to end of a domestic US taxpayer's life. It will give you just about everything you need to know. You don't need to read it hands down or like cover to cover, but use it as a guide to help you go through kind of the ins and outs and help guide you as far as who is a dependent, what filing status do I qualify for, what tax credits am I eligible for, what deductions am I eligible for, is this a business or a hobby? All of that stuff is in publication 17. So if you really want to educate yourself, publication 17 is the way to start. And I believe it's in English and Spanish now. So I think I probably have a copy of it around here. Oh, that's another thing. The IRS will send you hard copies of their documents. So if you want an actual physical copy of the publication, you can just go to the website and request one, and they send it out pretty quickly, like in a couple of days. So
Interesting. I don't know if I'm going to be able to get through it, but very interesting. It's good to know that there are resources.
yeah, yeah.
Oh my gosh. Well, thank you. Thank you for mentioning that. And so we're talking about, people living abroad, but what about living in the US? Beyond being a US citizen or a permanent resident, does an H-1B visa holder have to pay US taxes?
Yes. Short answer, yes. Yes, you do. So an H-1B visa is a type of visa that's normally affiliated with someone who is coming into a career at a level that's not a management level. So it's not someone necessarily that's entering the workforce for the first time, but it's someone who hasn't yet moved to the management level. In the US, a lot of times, those students tend to be, or those taxpayers tend to be coming off of a student visa, an F1 visa, or something along those lines. When you're in the US on an F or an F1 visa, all of your days of presence are exempt for what's called the substantial presence test, which if you're a non-resident alien, or we're not supposed to be using that word anymore. If you are a non-citizen of the United States, you are either going to file as a full year resident, meaning you would pay tax on your worldwide income like any other US citizen. You're going to either be a non-resident, you only pay tax on your US source income, or a dual status resident. Part of the year you're a resident and part of the year you're a non-resident, and you pay tax accordingly for the respective portions of the year. When you're in the US on an F visa, F as in Frank, then you are treated as a non-resident. You only pay tax on any US source income, which you could be a student and working in the US, get a W-2, that's all you're going to pay tax on. You don't have to worry about the income that you received in your home country, any investments, anything like that. All you have, any non-US investments, you would only be focusing on the income that you earned while you're in the US. Okay. Now, let's say I'm an F1 visa holder. I get a job. I graduate from school. I get a job. My employer gets a H-1B visa for me. And now I switch over during the year. Well, that's that dual status, that transitional year. So part of the year when I was on an F, I was a non-resident. Part of the year when I'm on an H-1B, I'm a resident alien. Okay. So that year it would be a transitional year or a dual status year. Every year thereafter that you're on that H, you're going to file and be treated just like a resident alien, meaning, or you are a resident alien, meaning you're going to be treated just like a US citizen from that point forward.
Okay, so many different little implications. I want to take a little bit of a step back, and I want to ask you, when filing these returns, what is the most surprising thing to you that people? Well, it's probably not surprising anymore, but that people don't know that they can get, maybe a tax credit or an exclusion? Are there things that people tend to miss when they're filing their taxes where they could, be getting more money back?
I would just say people not keeping track of what they're doing through the year. It just, if I were to ask you today, what did you do May 5th in 2020? You're not going to remember. I mean, there's no way you're going to remember. So just having some sort of system to keep track of whatever you're doing throughout the year so that you can recall that information at tax time. It doesn't matter what that system is. I have some people that literally come to me with an envelope full of receipts. I have people that have extremely detailed and complicated spreadsheets. I have people that keep everything electronically in different folders and different files and things like that. It doesn't matter. Well, for me at least, it doesn't matter what that system is, but just having some system. If you have a home, especially, what expenditures are you using for that home? Did you get new windows? Did the windows make your home more energy efficient? Well, there's a potential deduction. And again, if I asked you about that at the beginning of the year, or about last year, you may not remember that you did that last year. Specifically with people that run their own business or who have a side business. I mean, it is a gig economy right now. People are doing Lyft and Uber and Instacart and Shift and all that kind of stuff. Keeping track of those expenses, keeping track of your mileage potentially. And there's an app, a friend of mine, she's a in-home piano teacher, and she drives a lot for her business. And I've been getting on her about keeping track of her mileage. And she just, she's so busy. She's got other things going on. I found her an app that will track it for her. And she just has to go in at the end of the day and look at her trips. And just as long as she's got her phone in the car, then she can just check the box if this is business or not. And then it'll print her out a report at the end of the year. So she doesn't have to manually go and write it down every single time. But anything you do for your business, my clients that have their own business, I always tell them over provide and I'll scale it back instead of not providing enough. Some of my clients are musicians. If you go to a gig late at night and you get something to eat with your band, or that could potentially be a deduction. Or if you have to dress up for a certain event like a red carpet or something like that, that could potentially be a deduction. If you have a in-home studio and you stack it with refreshments, that could be a deduction. So things like that, where I'm always like, give me everything, and I'll tell you this might be a little suspect. If you get chips every day and then you're saying it's a business expense because I need this to be creative, probably not so much. But I'd rather you give it to me and I can say that's probably taking it a little far than we don't have it at all.
Oh my gosh, I have never thought about all of these different things you can get like tax deductions on. And so talking about US expats, how does that apply living abroad, right? Because I believe within the US, I remember going with my parents to their accountant when they were doing their taxes, and they would ask if you had any big purchases throughout the year, house, I don't know, a car, things like that. So when you do those things abroad, does that also count, or do they only want to see big purchases that you've made in the US?
No, as it's going to matter whether you're here or not. So in the US, if you're a US taxpayer, I always say the IRS is like that crazy ex that you see on a Lifetime movie that's like, no, I'm going to have you no matter what. So it doesn't matter if your transactions are inside or outside of the United States. The IRS is always going to tax them, and you're always going to get those benefits. So you definitely need to keep track of them regardless, because the IRS is going to give you those same tax benefits. It's just like they're going to give you the tax and they're going to assess, they're also going to give you that additional benefit, those additional benefits.
Wow. Okay. Good to know. Very, very good to know, especially, as you're living abroad. So I want to ask another question. Do I need a US based tax representative while living abroad? Can I do my taxes as a US expat on TurboTax? Or do you have another one maybe to recommend? What's the best way to go about filing the taxes?
Oh, this is another, it depends. So yes, it's possible to do your own taxes on TurboTax, depending on how complicated your situation is. It's not unheard of. Some people do very well. I would just say it depends on how much time you want to spend learning about the US income tax code, Internal Revenue Code. It depends on how much research you want to do. So for example, I have clients that have just a W-2. They live and work overseas. They've got a W-2. That's not something that you necessarily need to pay someone for. If you are living and working overseas, your tax situation is going to be pretty straightforward from a US perspective. Now, let's say you're living and working overseas, you're getting paid by a foreign employer. Let's say you are investing in the foreign pension, which would be deductible normally, but because it's a foreign pension and not a US pension, those things we need to take into consideration. A lot of people don't realize how complicated their tax situation is. So same person, all they've got is a W-2, but they're also getting their foreign employer is investing in the foreign pension. The foreign pension is investing in mutual funds. Well, now what you have is what's called a passive foreign investment company. There's a whole separate set of filings required for that. The penalties get to $50,000 very, very fast. you could have invested in your foreign employer's pension plan, and that could be treated as a foreign trust. That's another one that'll get you the $50,000 penalty really fast. At the very least, you'll get a $10,000 penalty really fast just for not filing or filing it late. So I think it's definitely possible, but at the very least, you don't want to be penny rich and pound foolish. If you're living overseas, it might be best to just find someone. And there are a ton of preparers out there that work in this space a bit, especially that are physically outside of the United States. So you don't need necessarily someone who works in the United States, but I always tell people I don't do UK tax returns because it takes all of my energy to make sure that I manage the US income tax situation the best I can. For me personally, I don't want to I know a lot about a lot of countries, but just not, I don't need to know so much that I'm an expert. So if someone's doing a bunch of different countries, then that would give me pause, me personally as a consumer. But if you feel comfortable with them, that's fine. But there are some people that live outside of the country in different parts of the world, and all they do is US tax returns, even though they're located in Belgium or the UK or France. And if they are comfortable with the law, then I would say yes. That's a long answer to a short question. You can do it yourself, but I would say in the beginning, if you can, get a consultation from somebody so that they can let you know your situation isn't very complicated. As long as you stay away from this or that, or as long as you continue down this path, you'll be fine. But it could be something as simple as paying into a social tax, and now you've got a foreign trust or a foreign pension plan that you need to report and pay tax on, and all this other stuff. It can get complicated really fast, and the penalties add up really quickly.
Okay, good to know. Good to know. And I appreciate that. I don't feel any less confused, to be honest, but I think that's just, it just feels like, oh, I don't know what those things, it's like when you look in a mirror, when you put two mirrors next to each other and it's like each one keeps going into each other. That's how I feel about taxes. Like the more I learn, the
pretty accurate.
the less I know. Yeah.
That's pretty accurate.
It's okay. This is the reason. This is the reason we do this, because it's a complicated topic.
Yeah.
So I want to ask you two last questions. We had a question that came in through the chat, which was asking the name of that mileage app.
I knew somebody was going to ask me that. I'll send it to you later, and I'll let you send it to everybody else, because I was like, as soon as I said it, I was like, somebody's going to ask me for that. There were 3 or 4 that I found that did the same thing. The one I was looking for her, I think, was the lowest cost, but it had the best benefit. But if you Google mileage apps or apps to track your mileage, they'll give you, there's a couple of articles that'll come up with the 2 or 3 that are the tops. I can't think of the one off of the top. It's probably has mileage in the name, or mile tracker or something like that, but can't remember.
Perfect. No worries.
Yeah.
And finishing up here, this is going to get maybe a little bit complicated, but stimulus checks. What can we expect around returns with that? For common people? I say it seems a little bit complicated. So love to learn a little bit more.
Okay. So there were 3 rounds of stimulus checks thus far. We will probably see at least one more round of stimulus checks. The first 2 were cut in 2020. The third was cut in 2021. If you did not receive your 2020 stimulus checks, or if you only got a portion of the checks, then you were eligible to, or you are eligible to calculate what's called a recovery rebate credit on your 2020 tax return. If you did not get your stimulus check for 2021, then that will be paid out on your 2021 tax return, most likely. It's very important, if you are someone who qualifies for a stimulus check, that you file your tax return as quickly as possible, because they are going off of whatever the adjusted gross income number from whatever the last tax return you filed. For a lot of people, that was 2019. It may be a year prior to that. 2020 was the year where a lot of people took a big financial hit. So if your income changed drastically between 2019 and 2020, you need to get your tax return in as quickly as possible. The IRS is still continuing to cut stimulus checks related to that January 1st stimulus issuance, which is why for some people that are still waiting on their tax returns, refunds, or their return hasn't been processed and they filed in February. That's the holdup. The IRS is processing stimulus payments simultaneously with these with the tax returns themselves. So the first thing is you got to get your tax return filed as quickly as possible. You want an accurate return first and foremost. But if you are someone who's waiting on that stimulus money, then you want to make sure that you get that tax return in so they have an accurate number, especially if your income dropped substantially or if it dropped at all. That's more money for you. That's the first thing. Second thing, if you have children, the IRS they increase the amount of the child tax credit, which is a refundable credit that you get for children. And prior to 2021, that was a $2,000 per child credit. It's gone up to $3,600 per child. And what the IRS is supposed to do is prepay a portion of that credit in 6 months, over the period of 6 months between July and December. No idea how they're going to do that yet. But what they're supposed to do is they're supposed to cut you a check for approximately $300 for every child you have that will qualify between July and December as an additional stimulus, sub-stimulus package is what I'm calling it. So if you have children that are child tax credit age, which I believe is under age 17 or 18, then you also want to get that tax return in before July so that you can get on the list to be one of those people that gets those credits. If you are living and working outside of the United States, it does not preclude you from getting a stimulus check. So if you are currently an expat and living outside of the United States, as long as you have a social security number, you qualify for, and you are not filing as a non-resident alien, then you will be eligible for a stimulus check. So I deal with some people who, they're in another country and that has been wrecked by the COVID-19 pandemic, and they'll call and say, "Do I get a stimulus check?" Yes, you do. It's that good bad relationship, that love-hate relationship we have with the IRS. There's bad, but there's also good to it too. So that's kind of my spiel on the stimulus situation. If your check was wrong, then don't worry, you'll get it back. You may not get it back on the 2020 return, but you will in 2021. And get your returns in as quickly as possible, because there most likely will be at least one more stimulus. This is just my, personal opinion based on the way things are going. We probably will have at least one more, and you want to make sure you get in line for that one as well.
Thank you so much for sharing. Yes, I was able to get a stimulus check as well, so I was very excited about that. And we have one more question that came in. It may be a big question, so but I would love to hear your opinion. So Ashley asks, what do you think should be changed in the tax code?
Okay. I do not like when they took, there's so many things. So these are a couple. Here's two that really bother me. One is and they're both related to the Tax Cuts and Jobs Act, which was the last major round of tax legislation under the previous administration. They got rid of the personal exemption and replaced it with a bigger standard deduction. I don't like that at all. If you have a larger family, you were hurt by that, because and then there were some other things that went away that you couldn't take itemized deductions for. All of that I would like to see reversed and put back to the way it was before. I think that in the new environment of people working from home, I think they need to expand the in-home office deduction for anyone who works in their home, let's say 3 or 4, however many days on average, 4 days a week. I know that when I worked for Coca-Cola, they would give us we would get a commuter benefit if we didn't drive to work. So if you drove to work, it was like you got a certain number of days that you could drive your car on the campus. And if you didn't drive more than that, they would either pay for your public transportation outright by, I'm in Atlanta, so we've got a train system. And then we also had agreements with both Uber and Lyft. This was awesome. I used to use this all the time. anywhere in the metropolitan city of Atlanta to or from the headquarters was $5, and that was it. So we had a separate code on the Uber that would say Coke pool, and it would be you and whoever else was coming. We would all go to Coke together, and it was just $5 for all of us. So I would like to see that in-home office deduction expanded outside of people who were just self-employed to people that work from home and have given up their office. And then the third thing I would like to see changed is with, again, the Tax Cuts and Jobs Act, they added a piece of legislation that expanded the term foreign branch to include self-employed individuals living and working overseas, and taxpayers that had foreign rental properties. So it's an additional tax filing that you have to complete if you are self-employed and live outside of the United States, and or if you have foreign rental property. That just is, it's tedious and unnecessary. But basically the IRS has said if you are self-employed and you live outside of the United States, you've created a foreign branch of a US company, and now you have to disclose all this additional information. So those are the three things I would like to see changed, because they the first two just irritate me a little bit, and the third one, it's frustrating because it's just a lot of extra work, and it doesn't make sense. I don't understand what they're trying to do there. So, but nobody asked me either, you know. Maybe.
I mean, I can definitely say that there's probably a lot of people that agree with you regarding the second one specifically, with so many people now working from home. Perfect. Okay, so this is really educational. Like I said, I'm still pretty confused, but that's why I can come back and watch this and take some more notes. And on that same note, how can we keep up with you? How can we support you and connect with you?
Sure. So social media is best. LinkedIn, probably I'm the most active. So if you search for me on LinkedIn, Katrina Montgomery Haynes, my information is on the Power to Fly website. If you have a specific question, at this point, I probably, unless you need help by the 17th, then it would probably be best to just go to my website, hayneshelp.com, HAYNES, and then help.com. And if you go to the contact us section, there's actually a link to schedule an appointment, and my calendar will just pop up. So if you have questions or you have any clarification requests, you could always email me, and that is in the same place on my website. So yes, but if it's urgent, just let me know it's urgent, and we'll try to fix you in, because that's what we're here to do, is help.
I love it. I love it. Well, thank you so much, Katrina. This was such a great conversation with so much packed into it. But the biggest thing I took out of here was that I need to file my taxes, because I still haven't done that. So I need to file my taxes ASAP. So I just want to say thank you so much, and I hope that you have a wonderful night.
Yeah, I still got several hours here to go, because we're on the home stretch. But yes, thank you.
And I will hand it back over to you, Meg.